With everything that's been going on in the world, what has that done to real estate? Well, let's dive into your March 2026 real estate market update. Let's jump in. This year we saw fewer sellers coming on the market, about 17% less than last year, and about 34% less than back in 2019. So fewer homes coming on the market, something to watch when we talk about supply. So here we have the number of homes that are on the market, not just what's come on the market, but this total inventory or supply. As you can see, 2026 is up about 6% from last year, so pretty close, and down 47% from 2019. So yes, the last couple of years have come up, more homes on the market, a little bit more supply, but traditionally still very restricted. So don't get too excited by a slight increase. And this looks at the general trend. That top line is 2019. Back in January, you start low, you come up, you peak, somewhere around August, and then you dip back down. 2026 is higher than the last couple of years. And following a similar trend, but still relatively low to what we used to see in terms of supply. So let's look at the other side of the coin, demand. Demand or the number of homes in escrow right now is up about 6% over last year, still down 39% from 2019 and even lower from the 2020, 2021 years. But you'll also see it's pretty similar the last 4 years. So while it's up a little bit, no major shifts there in terms of demand. And this looks at the seasonality. Again, January on the far end. Demand usually peaks about May. Remember, inventory is peaking in August. Demand is peaking in May, and then it kind of slows down. And the black line, 2026, dead nuts on the last couple of years, within a few percentage points, starting low in January and coming up. So we don't look for major shifts there. Things that would drive a major shift in demand, interest rates, world events can factor in. They generally have a short-term effect unless there's some major thing that we're not seeing on the horizon. Here we see the number of sales. This is closed homes in February, down about 10% from 2019. So those numbers are actually getting closer. We had seen bigger differences, and now we're seeing a little bit closer to the historical numbers that we've seen. But in that vein, the last 4 years, we've seen not major increases in sales, at least for February. Now, this is a little bit interesting because February 2026 had a lot lower interest rate than 2025, but demand ended up being about the same. So as we've seen interest rates now bounce around, and we'll talk about it more in a second, bounce around 6%, we need to watch if that does spur buyer activity or if it remains about the same. So here, 2026 did have a slight increase in the number of sales closed year to date, up about 4% over last year. Still down about 11% from 2019. You can see the last couple of years, a little bit of an increase, but nothing major, no major shifts in the demand side. Here's one of the bigger factors that we need to keep an eye on. Last year, rates had already started to come down in February of 2025, down to in the 6.7% range. If you looked real closely, we dipped down just a little bit below 6%, 5.99, which was the lowest rate in 4 years. With some of the world events going on, rates did pop back up. Concerns over increases in oil prices and things like that factored into that market, but that's still relatively lower than what we've seen in quite a while. So that could lead to more buyer activity as the amount of money buyers are spending per month goes down. For every 1% of interest rate drop, it's about a 10% drop in their payment, depending on how much they're putting down, of course, but that's a significant amount of change. So you need to definitely keep an eye on that. That's something that's on our radar that we'll be watching for you. So here you can see what has happened to pricing. We had a bit of a bump from February 25 to 26, up about 2%. Still down about 2% from the peak. We've been running at 5% below the peak. So we're gotten a little bit back, in the last month or so, a little bit closer to that. And part of that is about a 3% increase in the last month. Now, this varies depending on the city. For example, in Laguna Hills, I noticed, wow, the price from January to February really dropped. Well, there's a reason for that. There were no sales in Nellygale. Average price in Nellygale, $3 million. Average price outside of Nellygale, less than $1 million. So when you don't have any sales at the high end, it can change the numbers on a short-term basis. But if you look at the averages, South Orange counties, we still had an increase, even though that particular city, Laguna Hills, had a decrease. So moving forward, what are we watching? As we mentioned, interest rates. Supply and demand still rule the day. If you have 100 homes for sale and you have 10 in escrow, that's a completely different market than 100 homes for sale and 100 homes in escrow. Right now, Ladera Ranch, for example, has been running as many homes in escrow as for sale. So that's a hotter market than some of the other areas where you have 2 or 3 months supply, or 2 or 3 times as many homes for sale than you have in escrow. That's more normal, but when are we ever normal? So supply, demand, mortgage rates, which affect supply and demand, coincidentally. Those are the main metrics that we're keeping our eye on. If you have questions about your home, or maybe a home you're looking at buying, give us a call. We're here to help you navigate a shifting market, whether it's up, down, or sideways. That's what we're here for. I'm Jim with the Bishop team, your leading realtors here in Orange County, California.